Thanks so much, everyone, for, I know it's right before lunch, so I'm actually going to focus on just a few slides and open it up to Q&A, and because I know everyone's pretty hungry, as am I. So we're here to talk about customers that don't fit the traditional box that most large financial services institutions have been used to lending to, and how we can go and figure out a way to make some of these round pegs squint into square holes, some that are long, some that are square pegs and fitting them into round holes. And one of the things that we have learned through the entire process of building Better.com, just a little bit about Better.com, we are now the fastest growing homeownership platform in the country. We're doing about $500 million a month of loans. We've grown 3x in the past year, and we hope to be the largest homeownership platform in the country over the course of the next 3 years. And what we've done in order to actually help a much broader range of Americans be able to buy their first home is actually have deep empathy for the problem that the consumer faces when they're seeking to buy their first home and finance it. And fundamentally, by understanding that customer journey, part of it which was a journey that I myself went through when I was 35, just a couple of years ago when I started this company, and me and my wife, who both had worked in finance, and I as an entrepreneur, for about 15 years post-graduation, were still daunted by a mortgage process that took over 60 days to buy simply a condo in Manhattan. And we lost that in the right school district with a really short commute to work for someone who was an all-cash buyer. And we said, if the mortgage process is so broken for us, how broken is it for everyone else in America? And we really dove in and we started fixing each little part of the problem, building an entire ecosystem and spending time breaking through so many barriers in building this company, much the same as the barriers that average Americans today face when they're looking to buy a home. So when we talk about the problem, I think it's 2019. The dot-com bubble happened 20 years ago. The internet was really imagined about and launched with the Netscape browser 25 years ago, and yet every part of the homeownership process, $35 trillion asset class, mortgages being a $15 trillion asset class, the largest tangible asset class in the United States, every part of this process is intermediated by people who know people who know people who know people who sometimes have a guy. And that guy knows another guy or a gal. And it starts with the daunting process of finding a house to buy, figuring out who's a good real estate agent. Is it the person on Zillow that bought the lead when you just clicked on something to say, go and see a house? Is it those 4 randos that are sitting around at the open house when you first go there, and they're like, hey, I'm John, or hey, I'm Bob, or hey, I'm Patty, right? Or, once you find them, why is every house so expensive? The average American is not looking and never has transacted something that costs $300,000. So suddenly, you're used to paying like a $50 cable bill or a $100 cell phone bill, and someone's asking you to write a check for $300,000. So massively daunting. But fundamentally, we're divorced from the process because while we're used to spending $2,000, $3,000, $4,000, $5,000 a month in rent, and by the time we are 10 years as renters at the age of 31, we're used to have paid maybe hundreds of thousands of dollars in rent, we simply cannot find a house that makes sense at any price point. And the reason why that's compounded is that when we do find the house that we want to buy, there are numerous people that we have to go figure out that we have to interact with. The homeowner's insurance agent. Should you buy a homeowner's policy with a high deductible or a low deductible? Well, I have no idea about what a roof is going to cost to fix, right? If there's a storm, I don't know what the storm patterns are going to be over the course of the next 30 years. All of this data that is hidden, that the consumer doesn't have access to easily, that is housed with these experts, each of whom have some form of licensure or another and are required. What we did to actually understand the pain that the consumer is going through was actually recognize that you see that green curve over there. We are, as the mortgage company, the company that vets each and every one of these providers vets each and every one of these products and effectively pays for the bulk of it, right? Because in a typical transaction, we're putting down $85 and the consumer's putting down $15. So if we are actually the counterparty that is responsible for the risk, why shouldn't we open that up and let the consumer know who's the best homeowner's insurance agent, what's the best policy for you, who is probably qualified to appraise this house the best, what is the best title insurance policy that you can get, how should you pay to buy and build a new kitchen, how can we make that cheaper for you, rather than what happens today, which is the entire landscape of financial services associated with the financial transaction of buying or selling a home is intermediated by this commissioned brokered layer, where the commissioned broker is spending 30 to 70% of the money that they make on customer acquisition, and is so therefore really, really, really invested in you doing the transaction at any cost rather than doing the transaction that's right for you. And that's why today, on an average house, you have 10% total transaction costs. Now, we don't actually think about it, but an average consumer is paying $35,000 to buy a house that costs $350,000. That's more than probably the car that they drive. And they just don't feel it because that $35,000 is getting cut up into 360 monthly payments of $100 each. And that is what we understood actually to be our utility function. We said, we're going to go take all of this transactional friction in housing and turn it into one seamless transaction and make it easier for people to afford a home in a way that they can actually understand. So the first thing that we did was we automated and digitized the mortgage process. Now, you see a lot of people talk about automation and digitization, some even sprinkle words like machine learning and AI into it. The fact of the matter is 95% of mortgages in this country are underwritten to Fannie, Freddie, FHA standards. And so no amount of machine learning or AI is going to change that. And so we said, let's not get hung up on the technology, let's get hung up on what our job is. Since GSEs effectively dictate what the criteria is for consumers, for the vast majority of consumers, 19 out of 20 consumers, to go and get a mortgage, what we need to do is to create the best engine, like the world's best VLOOKUP table, which is sort of the way we did it the first time around, right? To actually match what the GSEs want to see about a consumer and their house with that consumer's house attributes and that house's attributes. So what we did was built a rules engine. And then what we did was say, well, whoever falls out of that, let's find out other investors that can do that too. And we'll go build these VLOOKUP tables and eventually turn into VBA scripts. And eventually now what we have is what we call algorithmic matching across 31 investors, the largest secondary market for whole loans, transacting $500 million of loans a month, doing with $700 billion of liquidity, including all the major GSEs, 8 of the 10 largest banks in the country, and so on and so forth. But we didn't set out to build that. We set out to build an amazing box that the consumers could qualify for, and then back-ended our way into building a marketplace. On the flip side, we said, what are the other issues that the consumer has? What prevents them from transacting? So now that we can go and manage and figure out a way to match the largest number of customers to the largest set of criteria for financing a home, what is the problem that the customer faces? Well, the customer doesn't know who to trust. And that's fundamentally a challenge, right? Because your parents are fundamentally different from you. The things that work for them don't work for you. Your parents didn't have the student loan debt that the consumers today do. The idea of saving 20% for a down payment plus paying off $100,000 of student loans is just extraordinarily daunting. So do you want to, but when you're renting, you're just simply paying your landlord's mortgage. So what we've seen is this entire group of people that have fundamentally different characteristics around down payment. Now, I remember when I went to my realtor and I said to them, hey, what happens if I want to do one of those 10% down mortgages to go and buy this place? He was like, you're going to do 10% down? I don't want to represent you. This is going to be a waste of time. I was like, why? It's just money. The money from the bank, the money from me, the money from this bank and the money from that bank, they're just as green as everyone else. And he was like, no, I don't want to do that. And if you tell someone that, then they're not going to want to transact. I was like, wow, the uncertainty that this bank will fund according to the criteria that it is plainly advertising online and in brochures is so high that someone doesn't want to transact with me. So how do we figure out a way to get the customer to be, that is wants a down payment lower than 20%, who's creditworthy, who's got great income? How do we get that customer to never, ever have to talk about how they're financing the home with their realtor? And so we developed a pre-approval process that initially, about when it launched 3 years ago, 3-minute pre-approval. And then we said, well, the pre-approval's not strong enough. Can we do an underwritten pre-approval? And then what we got to is we do a commitment letter in 1 day. And if we can do a commitment letter in 1 day for the customer that wants to transact today, what we can do is remove the uncertainty associated with financing the home. And so the financing contingency that is there in every contract, we can just get rid of that. And since that time that we started doing this and showcasing it to our customers, even though the traditional banking ecosystem relies on loan officers sitting in branches who, at best buy coffee and donuts for their realtor friends, at worst take them out to the Giants game, every month there's a closing, right? And even worse, cash in envelopes. Those, we didn't have any of that, and yet we've grown our purchase business to $300 million a month in some months during the busy season, from virtually 0 2 years ago, by delivering the customer value. And by delivering that customer value, getting rid of that commissioned agent, what we've been able to do is unique within the fintech landscape and the banking system, is to actually build a purchase money mortgage business from scratch with 0 realtor partnerships. And now, what we've been able to do, since we've been able to do that, is actually now serve the customer and help, and such that realtors are coming to us and saying, hey, my customer wants to go with you. I want to plug into your network so that you can actually start to interface with me and give me better certainty because I've seen the online process and so on and so forth. So we have now thousands of realtors that are on our network working within our ecosystem, because rather than being just a finance company, we decided to be an ecosystem company and solve the customer's true problem, which is not just speed, not just price, but also certainty. From there, what we also started to do is actively talk to the consumer about what does it mean to, that you have all of this financial innovation. Financial innovation on its own is great, but what we are able to do for the customer, because the average customer has very limited financial education, is actually dramatically change the way that they consume housing. So this is a customer quote from a customer that we finance. This is my first experience shopping for a house. I used other online mortgage companies, but found that your company's portal was much easier to use, and I was able to increase my budget by $30,000 due to the better 30-year fixed rate you pre-approved me for, compared to the other companies where I was pre-approved. This makes a huge difference to my family and myself, as we can now afford to shop for houses in better school zones with shorter commutes to my work. So the average American consumer cannot tell the difference between 4 7/8 and 4 3/8 like the people in this room can. They simply can't. But the consumer can tell the difference between the house that they can buy for $35,000 down and $1,500 a month. And so what we've been talking to consumers about, and what we've gotten in their minds and what has enabled our growth, is the idea that if you have a better mortgage, you will get a better house. And that's the magic that we can do to take customers who traditionally would never consider housing, couldn't afford housing on whatever terms they had, whether it's because their income was volatile, whether it's because their down payments were too small. We're actively using financial technology to automate the process, remove intermediaries, and deliver housing to them, and not worse housing, but better housing to them in a way that they can actually understand. And I think that's when we talk about underbanked, inclusion, all of these things. Fundamentally, the challenge is not to give that consumer a product at a higher price, because they really can't actually afford it. Because if you can't solve the affordability challenge, then it's almost better not to give them the product at a higher price. The challenge is, can you deliver a better product to that customer, leveraging the attributes that that customer has, and helping them understand why they qualified for this, and in a way, talking to them in something that they can understand. And I think that's really been the key to our success. And I encourage everybody in this room to really think about, ultimately, the customer problem. What is the customer trying to do? And start with the first principles of that. And then from there, build a business that meets them where they're at. And never stop. Never stop pushing until you can help them get what they need.